So these are the three major types of averages which are taken. Now everyone knows in in.tradingview.com we have learned how to change the time frame. Have you already discussed multi-time frame analysis? Grandfather, father, son. Grandfather was monthly chart. Okay. Father was weekly chart. Son, daily chart. Correct? In that, understand, if I'm talking about a daily chart and if I'm talking about 5, 13, 26, daily will be like 5 days, 13 days and 26 days. If I'm talking about a weekly average, so weekly type of candle is chosen, time frame is weekly, then it will be an average of 5 weeks. That's going to be a big one. 5 weeks average, 13 weeks average and 26 weeks average. So that's like a half a year almost. Correct, na? 26 weeks average, that's almost half a year data. And if I'm on a monthly chart, this is the too much. 5 months ka average and 13 months ka average, and this is 26 months average. Is this okay? Yes? So whenever I say 5, 13 and 26, depends on what time frame you are in right now. It could be either 5 days, 13 days, 26 days, or it could be 5 months, 13 months and 26 months, whatever you are looking at. Is this okay? So again, you want to write this down, which is the type of chart and what would be the types of averages? Shall I dictate? Okay, so write down vertically. I'm dictating vertically. Types of charts. Vertically write down daily, weekly, monthly. Just be a bit fast while writing. Daily, weekly, monthly. Next, write down as a column heading, first moving average into bracket MA. Now we have a shortcut. First moving average into bracket MA. Second MA and third MA, horizontally I dictated. First MA, second MA, third MA. Okay, just do one thing. Wherever you have written types of chart made daily, weekly and monthly, just write down into bracket D, W and M, so that it will be simple. D for daily, W for weekly, M for monthly. Okay. Now vertically for first moving average, you have to write down 5D, 5W, 5M. 5D, 5W, 5M. Second column vertically 13D, 13W, 13M. 13D, 13W, 13M. And last one would be 26D, 26W and 26M. Is this okay? So why I'm clearing all these things, when I start taking charts, then again I'm not going to tell all these things. We are building the basic right now. Okay. That's what we discussed. 5 days moving averages, like analyzing 1 week's data. 13 days, 1 fortnight data, and 26 days is almost 1 month's data. Fair enough? In majority cases, very important point, in majority of the cases, 5 days moving average line is very close to the current market price. Do you agree with this statement? Okay, I'll give you in a different way. What do you think? 5 days moving average line will be more close to the current market price, or 26 days moving average line will be more close to the current market price? 5 days. Because that's like the recent 5 days data. Na? So that average, if I were to plot on the line, that line will be very close to our current market price data. Of course, I'm going to show this all on the graph also, so that it will be more clear to you. But everyone agrees with this? So 5 days moving average line which will be very close to the current market price. Can we go on?